Welcome to Open Elective Descriptive Analytics of Financial Statements. Today we will discuss some practical examples on fund flow statement, cash flow statement, and balance sheet with trading and profit and loss account. So in this session, I'm going to discuss with you all how a business or a companies will be practically dealing or practically preparing the financial statements. So in that, first one will be the trading and profit and loss account with a practical example. I'm sharing a PPT for you for better understanding. I hope my PPT is visible to you all. So let us call this unit number 4, and in that practical exercises on balance sheet, fund flow and cash flow statements. So the statements which are very much important and very much gives you the realistic understand and realistic picture about the company, how they prepare their balance sheet, how they prepare their fund flow statement, how they prepare their cash flow statements. So subunit 4.1 will be dealing with the practical exercises on trading and profit and loss account and balance sheet. Trading account, profit and loss account and balance sheet. Okay. So first one is, you may look at here, the one example is given. Miss Kriti started business on 1st January 2021 with a cash of rupees 25,000, furniture of rupees 5,000, goods of rupees 1,000 and machinery worth rupees 10,000. During the year, she further introduces the capital of rupees 10,000 by opening a bank account. From the following information extracted from her books required for preparing trading and profit and loss account and the balance sheet. Okay, so here Miss Krati is a businesswoman who started her businesses on 1st January 2021 with certain requirements and certain investments or certain contributions, I can say. And next, they had given the dealings for the year, what all she dealt. So here you can see the trial balance, receipts from debtors 28,750 rupees, cash sales 22,500, cash purchases 12,500, wages 2,500, salaries 8,750, trade expenses 3,250, electricity bill of a factory 3,750, drawings 1,500 per month, cash paid to creditors 21,000, discount allowed 600, discount receipt 1,500, bad debts return of 650, and closing cash balance is rupees 10,000. So this is the information which is given by the Kriti on her businesses, what she dealt for a year. So here there are certain additional information will be given. Additional information is given. So first is Miss Kriti used goods worth rupees 1,250 for private purpose, which is not recorded by her in the book. Charge depreciation on furniture at 10% and on machinery 20% per annum. On 31st March 2022, debtors, creditors, and stock in trade were valued at 35,000, 17,500, and 12,500 respectively, which means the values are regenerated. Okay, let us begin with the solution for this. So first one is trading account. So what we prepare in trading account, first we will go for a preparation of, we will involve in trading account all the direct and indirect or operating and non-operating income and expenditure will be recorded. So the expenditure will be recorded at the debit side, that is where I return to, and the credit on the credit side, that is where I return by. So there we will record all the direct incomes, that is operating incomes, we can say. Okay, let us start. So let us start with this. So opening stock. So she had her business opening stock, which is given in the information that 10,000 rupees of a machinery. Okay, so not 10,000. This is opening cash of rupees, her cash. Okay, so the 10,000 she had a opening value, so which is recorded here. opening stock. She had a 10,000 rupees of a raw materials. Next, to purchases. So whatever purchases she made, that will be recorded. So cash purchases 12,500 she purchased on a cash basis. And next, credit purchases, that is recorded in the working note number 3, that what all the credit purchases she made, that is rupees 40,000. And in that the drawings of a goods, so the drawings which he made for the year and which is not recorded of rupees 1,250, that has to be deducted, so which will become 51,250 rupees as the total purchases. That is called as a net purchases. Next, to wages, so she had given a wages to some labors, that will become total 2,500 rupees. And next, electricity bill of a factory. From factory she had an electricity bill which she used of rupees 3,750 rupees. Next, by sales, so there are certain sales she made during the year. So in that, cash sales of rupees 22,500, credit sales, that is recorded in the working note number 2, 65,000. So total is 87,500 she made a sales for the year. That is, we can say, net sales. And next, closing stock. So the remaining closing stock, or the value which is remaining after end of the year, that is 12,500. Further, no information is given. So we have to calculate the values which side is more. Okay, if example the debit side is more, so then we will take the total value to the credit side and we will record the gross loss. If it is credit side more, we will take the balance to the other debit side and we will record it as a, if the remaining balance, we will deduct the values whatever are available in the debit side, and whatever the balancing figure will be taken it as a gross profit. If the balancing figure is remaining at the credit side, then it will be a gross loss. If the balancing figure is remained at the debit side of the trading account, then it will be treated as the gross profit. Let us see what is the account she made. What are the working notes she made? So first one is creditors account. So you can see in working note number 3. Sorry, first we'll go for working note number 1. So in this working note, statement of affairs as on 31st December 2021. Statement of affairs in the sense what all she made, what all she invested in that. So capital balancing figure. So total she invested 25,000 rupees in cash, stock as a 10,000 rupees, furniture 5,000 rupees, stock in the sense here goods will be stock will be treated as a goods. And next, furniture is rupees 5,000 and machinery she had a 10,000 rupees. So total we calculated it will become 50,000. And debit side she don't had, she is not returned anything from the business, so that will be taken as a the 50,000, that will be treated as the capital balancing figure. And next, in debtors account, we can say the two balance brought down. So there is no previous balance which has to be taken forward. So that will be kept as a nil. And next, to sales credit. So she had a sales credit of rupees 65,000. Next, by cash. So cash, she had certain received some 28,750 rupees. In that she allowed discount of rupees 600, and bad debts she had a 650 rupees. And total balance carried down will be 35,000. So altogether will become the 65,000. So here 65,000 is debit side is more. So we taken the balance to the credit side, and here after deducting 28,750 and 600 and 650, total balance will be remaining 35,000. So that will be taken to the our trading account. Okay, next we'll go to creditors account. So what will be there as a creditors account? So to cash, she received a cash of rupees 21,000 and there is no opening balance. If it is a credit account, if it is a creditors account, if there is any opening balance, then we will open it as a debit credit side. If it is a debtors account, so then we will open it if any opening balances or previous balance will be there, that will be taken as a, that will be taken forwarded, and that will be taken at that will be treated as the debit side of the account. Okay, so here to discount received is 1,500. So next, purchases credit. So whatever she made purchases on a credit is 40,000. So next, so we can say there is no other values will be remaining. So the to balance carried down, the remaining balancing figure which will be taken to the trading account. So that is 17,500. Next is the trading account we have seen. Next we go for the profit and loss account. So in profit and loss account, you see that we will record all the indirect income and indirect expenses in this profit and loss account. So first we will go with the debit side. So first is to salaries. She had given a salaries of rupees 8,750, to trade expenses of rupees 3,250, and discount allowed 600. Bad debts means the debits which will not come, so that will be 650 rupees. Depreciation, she had given depreciation charges. Furniture 10%, the furniture value is 5,000, on the 10% they charged rupees 500, and machinery value is 20%, that is the machinery value is some let us check what is the machinery value here. So machinery value is 10,000 rupees. We can, so 10,000 rupees on this 20% will be calculated. So the total will become 2,000 rupees as the machinery depreciation. So total depreciation is 2,500. Now let us come to the credit side. So whatever gross profit will be there from the trading account, that will be taken to the credit side of the profit and loss account. So that is by gross profit, that is non-operating income, and discount received. So during the business, she earned certain discount. So that is 1,500 rupees she earned the discount. So total will become 34,000, which is credit side again more, and that balance will be taken to the debit side. So that is 34,000, and remaining the whatever debit side values will be there, that has to be deducted. So whatever the value will be remaining, the balancing figure, that will be treated as the net profit for the businesses, and this will be taken to the balance sheet side. This will be taken to the balance sheet, at capital side it will be added. Okay, next is the balance sheet. How balance sheet will be prepared? So from the following certain information which we have calculated, we will calculate the balance sheet. First one is, we will go for a liability side. So in that, first one is capital, that is working note number 1, which I already shown you. So that working note will be telling us that this statement of affairs, the 50,000 is her capital contribution. So that will be taken as here 15,000, 50,000. In that we are adding the net profit 18,250 rupees, and in that additional capital of rupees 10,000. And later in adjustment they given that she had introduced 10,000 rupees in the total become 50, 68,250 and 78,250 rupees is her total balance. In that she had withdrawn 1,250 rupees per month, so which will be calculated for 12 months, it will become 18th. So for per month we have to deduct it, and cash she had taken 18,000. So next, goods, she had a goods of rupees 59,000, that has to be payable, and creditors 17,500, which has to be paid back to the creditors. Next, she had a cash in hand of rupees, let us come to asset side. In that she had a cash in hand of rupees 10,000, cash at bank at 6,500, that is working note number 4, which I had shown you. So this is the summary of cash which she had earned. So first one is opening balance, which she had in the account. So that is rupees 25,000, and she introduced into the capital to the bank. So that is 10,000 she has deposited. And next, debtors 28,750, and to sales 22,500 she had earned the cash. And next, by purchases, she had expended purchases 12,500, wages 2,500, salaries given 8,750, trade expenses were incurred 3,250, electricity bill for a factory is 3,750, which she earned, and creditors she paid 21,000. By drawings, so every month she are taking 1,500, so which is become cash, we can record it as a cash 18,000. By balance carried down cash, so she had a certain cash of which is carry forwarded, so that is total 10,000. And cash at bank balancing figure will be 6,500. Balancing figure in the sense, total we have calculated debit side is more and credit side is less. After deducting the debit side total value into credit side, we got the 6,500 as a cash at bank, that is balancing figure. Okay, so we'll see in the balance sheet what we recorded. So in balance sheet we recorded cash at bank, working note number 4, 6,500, and stock 12,500, which is left as a closing stock. Debtors 35,000. Okay, and furnitures 5,000. In that depreciation will be sorry, in that depreciation will be removed from furniture, that is 500 is removed. So the total is 4,500, and in machinery 10,000, in total value is 10,000, in which the depreciation is deducted, total will become 8,000. So total the balance sheet will be get valued at 76,500. So this is about the subunit 4.1, the practical practical exercise on balance sheet. Let us go for practical exercise on fund flow statement. So subunit 2 tells us that practical exercise on fund flow statement. So you may see in here, you will look into, you can see here that there is a balance sheet which is given of a John Trading Company of for the year 2021 and 22. Okay, so see the balance sheet liability side, they're given, one is previous year and the present year, and here again previous year and present year. So it has to become 2021. So it has become 21, 22. I'm very sorry for that. I'll make a changes. So liability side, what are they given? Equity share capital at the year of 2020, it is 3 lakh, and at the year it has become 4 lakh rupees, which is increased. Redeemable preference shares, share capital, it is earlier 1,50,000 and now it become 1 lakh rupees. And general reserve, previous year it was 40,000 and now it is become 70,000. Profit and loss account, it was 30,000, now it is 48,000. Proposed dividend, earlier year it was 40,000 and present year it is become 50,000, 42,000 to 50,000 is increased. Creditors, the previous year it was 55,000, now it is 83,000. And bills payable, earlier it was 20,000, now it is become 16,000. Provision for taxation, 40,000 was the previous year's value and current year value is 50,000. Now the asset side, so the goodwill is, you can see that 1,15,000 was there for the previous year. Now it is 90,000. Land and building was 2 lakh rupees. Now it is 1,70,000 rupees, 7,70,000. Next, plant, which was previous year 80,000. Now it has become 2 lakh. Debtors, earlier it was 1,60,000. Now it has become 2 lakh rupees. Stock was 77,000 for the previous year, and in the year 2021 it is become 1,09,000. And in bills receivable, the earlier year it was 20,000, that is at the year 2020 it was 20,000, and then at the year 2021 it became 30,000. Cash in hand, in the year 2020 we had 15,000, but in 2021 we had only 10,000. And cash at bank, we have a balance of rupees 10,000 at the year 2020, and at the year 2021 we had a balance of rupees 8,000. So altogether our balance sheet got tallied at 6,77,000 for the year 2020, and for the year 2021 8,17,000. So they're given certain additional information as well. You can see that depreciation of rupees 20,000 on land and building we have to calculate, and rupees 10,000 rupees to be calculated on the plant has been charged in the 2021. So 10,000 will be charging on the plant at the year of 2021, in the year of 2021. Next, interim dividend of rupees 21,000 has to be paid in the year 2021. So interim dividend in the year middle, we have to pay the dividend of rupees 20,000 in the year 2021, and we need to pay the income tax of rupees 35,000 in the year 2000 during the year of 2021. So this is about the balance sheet details. So now let us go for the calculation. First is statement of changes in the working capital. We have to calculate. So here statement of sources and application of funds, and this will be also called as a statement of changes in the working capital also. Okay, first one is sources of fund. So in that, first one is issue of equity share capital. So you can see that the 3 lakh rupees were the earlier value, and 4 lakh rupees was the current value. So total is increases 1 lakh rupees. Sale of building. So building was having 2 lakh rupees, and now it is, in that we have to deduct the 20,000, which will become 1,80,000. And now it is become, after selling we had a loss of rupees 10,000, that is it is increased, it is reduced to 1,70,000. The value will be 10,000. Next, fund from operations. So the funds from operation, we had a 2,18,000. That will be told you how it will be calculated, how it is came. So total sources we had a 3,28,000 rupees. Next, application of funds. So application of funds is redeemable preference share capital. So where we are applied our funds, this is are the sources where we generate our sources. And now you can see that where we are getting the dividend, where we are getting the preference share capital. Just give. Sorry for the interruption. Now, where the funds were getting applicable. So first we can see the redemption of preference share capital. What has happened, we'll see that in redemption of preference share capital, you can see that for the year 2020, it was 1,50,000 and in the year 2021, it become 1 lakh rupees, which means we have a less in the value of preference share capital. So that will be taken as a 15,000 decrease in the capital. Next is purchase of plant. So for the year, we had a purchase of plant. So where our fund will be applicable. Earlier it was 80,000 on which the charges of plant of 10,000 will be applicable. So in the year 2000 on 2 lakh rupees, 10,000 will be applicable. Total will become 1,90,000. So which will be total calculation of 1,30,000 we have purchased. By paying 1,30,000, we got the purchase of a plant. Next is dividends paid. So previous year we paid a dividend of rupees 42,000 and now we are paying again 20,000 as an interim dividend. So total will be the amount where we are applicable, funds which are applicable. Next is payment of tax. So tax is also paid, that is 35,000 rupees we have to pay the during the year of rupees 35,000. So total applications were our 2,77,000. So we'll see that what are the net increase in the working capital, that sources minus applicable applications. So total sources are 3,28,000 and total applications are 2,77,000. So total will become 5,21,000 as a net increase in the working capital. Now, so here you can see that how the land and building values will be affected. So first working note is land and building. The opening balance of a land and building is 2 lakh and in that depreciation will be charged as a 20,000 rupees. So and the closing balance will be 1,70,000 for the year 2021. 1,70,000 is the closing balance. So when we take that, so 1,70,000 plus 22 lakh, it will total will become 1,90,000, in which 10,000 rupees is a sale, that is profit we earned on the that sale of a building. Next is plant account. You can see that how much we paid a purchases. So opening balance was rupees 80,000 and depreciation we are charging 10,000 and the closing balance is 2 lakh rupees. So total will become 2,10,000 and the remaining balance will be 1,30,000, which will be taken to the balance sheet. Okay. Next is provision for tax account. So how much we are paying? So the cash application where we are applying, where we are going to pay that 35,000 and opening balance previously it was paid 40,000 and the closing balance is 50,000. We have to pay the we are going to pay the tax. You can see in the balance sheet that provision for taxation previous year we paid 40,000 and this year we are going to pay the 50,000. In between again we are paying some 35,000, total become 85,000 and in that the remaining value will be 45,000 is our profit and loss account, which will be brought forwarded. Okay, so this is about the working notes. So you can now let us go for a computation of funds from operations. So in that total is total 4 columns will be prepared: particulars, inner amount column and external amount column. So in that first one statement will be profit as per profit and loss account. So what we earn the profit as per profit and loss account, you can see in the balance sheet that in profit and loss account you see here here we had a 30,000 rupees for the previous year, and now we had a in the year 2021 we had a 48,000, which is increase, so that 48,000 minus 30,000 is 18,000 is increased, so that is profit. And next in that we are going to add the depreciation, that where our fund will be going, which is not in a physical manner but which will be deducted. So total will be, total will be 30,000. Next, goodwill written off. So the goodwill value is reduced 25,000. Transfer to general reserve. Earlier year it was 40,000. Now it is 70,000. So transferring to general reserve is 30,000 is increased. Proposed dividend, total we are proposed dividend is 50,000, and we are paying 20,000 as an interim dividend, and provision for taxation which we earned is total is 45,000. So total funds we are having, total will become 2 lakh rupees, and total funds from operations is 2,18,000, which is taken into this sources statement of sources and application of fund, which is recorded here, option C, funds from operations. So this is about the fund flow statement. I hope that you all learned very well. If you have any doubts, you can ping me anytime. Thank you for attending. Have a good day.